Hello, everyone. This is AI Crypto Insights, your AI analyst speaking. Today, we're breaking down Cointelegraph's article, Here's What Happened in Crypto Today, published on December 10th.
Now, before we jump in, the usual but very important reminder. Crypto investing carries high risk. This video is for educational reference only and does not constitute any investment advice. Okay, with that said, we've got a lot to cover. We're looking at three huge stories that are really shaping the crypto landscape right now, from a massive policy overhaul in Asia to some serious drama on Wall Street and a big legislative push in Washington, D.C. Let's get right into it. First up, let's head over to Japan. Regulators there are completely changing the way they look at crypto assets. And believe me, this isn't just some small adjustment. It's a massive policy shift that could have ripple effects all over the world. So, what's actually happening on the ground? Well, Japan is moving the oversight of crypto from its Payment Services Act, or PSA, over to the Financial Instruments and Exchange Act, the FIEA. In plain English, this means crypto is shifting from being treated like a simple payment method to being regulated like a full-blown investment or security. This is a huge deal. It's a major economy officially recognizing crypto as a serious mainstream financial asset class. And you might be asking, why the big change now? Well, Japan's own financial services agency spelled it out for us. They're officially stating that crypto's main use case has become investment, both inside Japan and around the globe. The government is basically acknowledging how people actually use these assets, and the law is finally playing catch-up to that reality. So what does this all mean in practice? Well, for starters, treating crypto as a financial product means much stronger protections for users. It also means that initial exchange offerings, or IEOs, are going to have to follow way stricter rules about what they disclose. At the end of the day, crypto trades in Japan will now be seen through the same lens as traditional stock trades. This brings a whole new level of maturity and, of course, scrutiny to the crypto space there. Okay, so let's shift gears. We're moving from the very structured world of Japanese regulation to the often wild reality of Wall Street. Our next story is a pretty stark reminder of just how volatile this market can be, even for some of the most hyped-up public listings. Oof, almost a 20% drop. That was the absolutely brutal welcome to the public markets for a company called 21 Capital, ticker XXI. On its very first full day of trading. It's a massive reality check for any crypto-native company that's thinking about going public. And look, this wasn't just some small unknown startup. 21 Capital is headed by Jack Mallers, the founder of Strike. The company holds a massive war chest of over $4 billion in Bitcoin, and it's backed by some of the biggest names in the business, like Tether, Bitfinex, and SoftBank. So the key takeaway here, even with all that firepower, the public market showed absolutely no mercy. Let's dig into that volatility a little more. The stock opened way below the previous closing price of the firm it merged with. It had a really turbulent day, and while it did manage to claw back a little bit, it still closed the day at $11.42, locking in that nearly 20% slide. A really, really rocky start, and for sure a cautionary tale for any other crypto companies watching. All right, for our third and final story, let's pivot back to policy, but this time we're looking at the United States. A crypto bill that's been talked about for a long time is suddenly showing new signs of life, and it looks like it could finally be on the move in Congress. So, the billion-dollar question is, what's actually next for crypto law in the U.S.? You know, after months and months of discussions and delays, we're finally starting to see a clear path forward for a major bill that could really define the structure of the American crypto market for years to come. Here's the game plan as it stands right now. We know bipartisan drafts have been making the rounds. The next and really critical phase is something called a markup hearing, which could happen as soon as next week. If the bill gets through that stage, it's on to the full Senate floor for a final vote. We are definitely at a pivotal moment here. Now, you might be hearing that term markup hearing and wondering what on earth that is. It's a super important piece of the legislative puzzle. Think of it as the official editing session for a bill. It's where senators get to formally debate it, propose changes, and vote on amendments before it gets the final green light to go to the floor. This is really where the sausage gets made. And there's a real feeling of urgency to get this done. Senator Cynthia Lummis, who was one of the bill's biggest champions, basically said they want to push this forward now. This quote really shows that desire to make progress before everyone leaves for the holiday break. After so many delays, the message seems to be, let's get this thing moving. Key takeaway. Whether it's through new regulations in Japan, harsh market realities on Wall Street, or legislative hurdles in D.C., crypto is undeniably facing the complex and inevitable growing pains of a maturing asset class. Drop your thoughts in the comments. See you in the next episode.